There is this common narrative that we are still cheap in Bitcoin, but the question is on what timescale? Over the next 20-30 years, yes, Bitcoin is probably cheap. Over the next 2 or 3 months, who knows? Let's have a look at some on-chain metrics, some models most people aren't considering. Now, in the end, no model is perfect, but some models are useful, and especially if you have quantitative approaches that worked in the past, there is an at least non-zero likelihood that they will work to some degree in the future as well. Now, here is the market value to realized value Z-score. Now, this chart starts at the end of 2014 when Bitcoin was below $300 and it goes all the way to today. And what we are looking at with this purple line is the realized price. Now, this is the average cost basis of the market. The current price is simply just the recent data point where demand and supply met. But it doesn't mean that's the average cost basis of the market. Let's say there's a lot of new people entering the market, a lot of new buyers that all want to buy Bitcoin. And let's say we are currently at, say, I don't know, $100,000. Now a lot of new people come in and they're all just buying from the current holders. That means, of course, that the price will go up, and that means that the new price, let's say $110,000, is above the 100K that we had before, and that all of those holders that held previously are now in profit. So the average cost basis or the realized price is below the current price. Now, why does this matter so much? It matters so much because everybody looks at their investment relative to the entry position, right? At what point in time did you buy, for example, Bitcoin, and how much are you currently in profit or in losses? Now, when you currently say 10x in profit and initially you put, say, 20% of your net worth in Bitcoin, suddenly after a 10x, the majority of your wealth is in Bitcoin. And do you actually want to have the majority of your wealth in Bitcoin when initially you just started out with 20%? Maybe not. And that's why you might consider selling. In other words, the reference point to when you bought relative where currently the price is does matter. And so we can simply extrapolate that idea, that psychological anchor point, to the general market, to all of the Bitcoin holders. And that is what the realized price is doing, right? We're simply looking at the current price relative to the average cost basis of the market. And when the market in aggregate is currently in losses, it makes sense to buy, because then if you're a long-term believer in Bitcoin, you're simply just waiting it out until you are in profit. But when the average cost basis is, say, only 19K and the current price is 63K and you're 3x in profit, maybe you take some of that profit, right? And so that's why I think the very best time is to always buy when there is maximum despair, when the market in aggregate is in losses, because then the sell pressure tends to diminish, and then the people that dollar cost average into Bitcoin, right, that buy a little bit every single month, they tend to create the floor. They tend to then push up the price again. Now, currently, we are obviously above the realized price. The market is more than 2x in profit. And so we can answer the question very simply. Are we currently cheap or expensive in Bitcoin? Simply with this average psychological anchor point of the market. Now, what we see here at the bottom is an oscillator. And this is where this funny acronym is coming from. Market value to realized value and then Z-score. Now, market value is simply the current price, right? The current number of Bitcoin times the current price. Realized value is the realized price. So 41K in Bitcoin times the number of Bitcoin. Now, what is the Z-score? Because just the MVRV ratio, that would simply be the current market price relative to the realized price. So roughly a 2-point-something x. Z-score does something else. Z-score adds volatility into the equation. In other words, if the price is currently going up and down a lot, when there's a lot of volatility, then we are okay with having potentially more people in profit, because then we can simply just have an outlier in the price, right? But when we creep up very slowly with little bit of volatility, then maybe we cannot allow that much of an overvaluation. So with the Z-score part of the equation, we're now looking at how much is the market in profit relative to the anchor point, and we put that in turn relative to the volatility, because in the early days there was more volatility than there was today. And then we can see how those tops tend to align somewhat. Now, we are not at crazy high levels. We haven't hit the points of the beginning of 2021 or the end of 2017. But again, we're definitely not hyper cheap either. Now, instead of looking at this relative to the volatility, we can also simply look at standard deviation. So again, we look at the realized price and how much on average does the price go above or below the realized price. And so then we've got those pricing bands that have different standard deviations. And when we are close to the dotted top line, things tend to be very heated. And of course, when we are close to the bottom green line, so that's -1 standard deviation, we tend to be very cheap. Again, we haven't hit extreme high levels. But the question really is, when you're currently at 73K, and you maybe bought a lot around 20K, and you're 3.5x in profit, do you really want to risk it to hit it all the way to 95K at that point? Maybe not. And something very similar could be said now, right? Let's say you didn't buy for 20K. Let's say you bought for 30K and now you're 3x in profit. Do you really want to wait all the way to 150K, make this additional 50% gain when you're already up 3x? Maybe, maybe not. It depends on the initial allocation you had to Bitcoin, right? When you put in, say, 20% of your net worth in Bitcoin at those low levels, it probably makes sense to take some profit. If you only put in, say, 2 or 3% of your net worth, and then the allocation drops by, say, 20, 30%, it doesn't really matter that much. So it's always about balancing a portfolio. Now, there are also less complex models. And what I find very interesting is that at least historically, it seems like very heated times of the market simply mean a lot of appreciation of the price in a short period of time. And so there had been an analyst that made the Pi cycle top indicator. It uses two moving averages, the 350-day moving average and the 111-day moving average, and the ratio of the two numbers is roughly equal to pi. And all of this is pretty much a coincidence. But what's interesting is that that model worked very well in the past, and it also worked for one prediction that happened after the model had been published. So whenever those two moving averages cross, that's a potential point in time when a top is in. And the indicator had been published somewhere around 2020, so before the top in 2021. But what is very interesting, that we had seen exactly the crossing very, very close to the high in April of 2021. We subsequently went down all the way to our 16K. Now what we see here at the bottom is simply the delta between those two moving averages, right? When the delta is very, very high, we tend to be at the bottom. When the delta is very, very small or negative, we tend to be at the top in the price. We aren't yet at the absolute bottom, right? Again, we are not super crazy heated, but we are trending downwards. In other words, the market tends to get more heated over time. The Pi cycle top indicator doesn't tell us that we have to sell right now, and who knows how well this works in the future, but it does tell us that it is very sensible to be more cautious than just a few months ago. Now, here's the thing. I believe that those models are useful, but they're definitely not perfect. And we can see this, for example, with the 200-week moving average, or the 4-year moving average roughly, right? In the past, people said that Bitcoin can never fall below that moving average, that Bitcoin will never lose in a 4-year time span. If you're holding for an entire 4-year cycle, right, this is also how long the halving takes, then you should be okay and you should be in profit. But that's actually not what happened. This model did break. So here's again a long-term Bitcoin chart when Bitcoin was just a few cents all the way to the beginning of 2022, and the 200-week moving average, this line in turquoise, was a very, very good bottom indicator. It bottomed at the end of the Mt. Gox and Silk Road collapse. It also bottomed with the minor collapse when the ICO boom was over. But then have a look at this. We then finally went below that moving average. We did not bottom out at 23K. We went all the way down to 16K. And so that's why we have to use several models, right? When you put all of your hope into the single model, then the question really is, what do you do at a point like this? If you expected the price to turn around at 22K, because that has always happened in the past, would you still continue holding after going down by another 28%? Maybe not, right? Maybe you start to panic sell and think everything is over. But when you're working with other models as well, right? Like for example, the MVRV Z-score, then you might have bought over there. And so here's one of those models that I believe will break at some point, but currently it's still useful. It's simply two curved lines randomly drawn on a chart. And isn't that super interesting how the Bitcoin price tends to very much align with those lines? The tops are very nicely connecting with one another. The bottoms are very nicely connecting with one another as well. And of course, this will not work forever, but still, it's a useful approach. It does tell us that Bitcoin is not necessarily hyper cheap right now, that it could potentially in the worst case drop by more than 50%, and that maybe after an appreciation of 23%, when the price is at around 117K, the air might be getting thinner. Maybe we've already reached the top, right? Nobody knows. If you're trying to squeeze out the last little bit, maybe it becomes too late. And so again, this is about the time horizon, right? If you're buying Bitcoin today in order to hold it for the next 10 years, probably everything will be fine. Probably Bitcoin will be higher 10 years from now compared to today. But if you're buying today and you don't want the Bitcoin price to go down by 40 or 50% and you would panic sell if Bitcoin is suddenly at 50K, then probably now is not the best time to get in. Because in the past, even if we didn't reach the top, we still went down by 77%. Those are the kinds of drops that are possible. Maybe the drops won't be that bad going forward because we've also got the Bitcoin ETF demand, etc. But still, 50% is on the cards, I believe. The long-term holders that tend to make the right calls, they are at least rather on the selling side right now. This is the long-term holder binary spending indicator. And long-term holders tend to accumulate when the price is going down. They did get a bit spooked during the minor collapse when Bitcoin went from 6.5 to 3.5K. But during normal times, they tend to accumulate and they only sell whenever we get very, very heated in the market. They also continued buying afterwards. They continued buying more and more and more. And at what point did that turn around? When Bitcoin was again at 44K. A lot of selling at 44K and then a lot of buying again when the price was slightly higher at 55K. And now long-term holders tend to rather exit again. And I personally, I've also sold 1/3 of my Bitcoin at 98K. I talked about this several times on this channel. When you're buying Bitcoin today at 90 something K, the idea is that the current positive momentum will continue. The idea should not be that Bitcoin is in the grand scheme of things very cheap. You're simply betting on the current attention to continue to grow. And that, I believe, is a shorter term play. That's a play that has a potential stop loss also, right? Let's say the attention does not rise, then you might want to exit. But if you're buying based on valuation, based on the average cost basis of the market, based on the average anchor point, and your time horizon is rather 2 or 3 years, then maybe there are better opportunities coming. This is the realized hodl ratio. So this looks at trading activity of the long-term holders versus the short-term holders. And you want to be selling when there's mainly short-term holders. You want to be buying when there's mainly long-term holders. This is oscillating quite nicely. And it also correlates nicely with the price. And currently, again, we tend to be rather high, not low. It is not crazy values of overvaluation, but it's not a bargain either. Now, there are two approaches to the realized price, and normally I just show one of them. Normally I show the realized price or the anchor point of the overall market. But there's also the anchor point of just the long-term holders. So what's the average cost basis of the people that tend to not trade Bitcoin that much? So here again, we've got the entire market. And again, it makes sense to buy whenever we are below. And the overall market has currently a realized price of 41.4K. But here's the same model just for the long-term holders. Again, in the past, we tended to hit that long-term holder average cost basis. And unfortunately, and that's the potential big warning, the long-term holders have a cost basis of only 24K. And again, in the past, we always hit that price. That would be quite problematic for a lot of other models, right? I don't necessarily think that we are going there unless we get a huge external event, unless, say, the tech stocks suddenly crash, unless we get a banking crisis or something like this. It's not the most likely scenario in my books, but it's also possible if things go really, really sour. And I know it's not something sexy to say over here, and I know that everybody wants to just have the 100x meme coins. But currently the market tends to rather cool off. The market is already in profit and the average anchor points are pointing towards quite a bit of a correction, potentially. Now, I don't have a crystal ball either, right? But when as per tendency we tend to be rather high than low, I think it's simply sensible to have something that hedges against the volatility. And the hedge should definitely not be Nvidia stock or Tesla stock, right? The hedge should be something that goes up during times of crisis. It should be a classical risk-off investment. Now, here's the thing. There are plenty of topics within crypto that aren't very sexy, but that are, I believe, very vital to make money long-term. For example, concepts like correlation. What we see over here are correlation coefficients. Did you know, for example, that most altcoins tend to be more correlated with Ethereum than with Bitcoin? In other words, it's not when Bitcoin goes up that the altcoins go up as well. It's rather when Ethereum goes up, then the altcoins go up as well. Or did you know that the correlation coefficient of the S&P 500 to Ethereum and thus the altcoin market is actually quite volatile? In other words, it does make sense to also own stocks, not just Ethereum, not just crypto. The common narrative is that when traditional markets go down, that crypto tends to go down as well, right? That crypto is simply just a levered bet on, say, technology stocks. That's not the case. The correlation coefficient is relatively close to zero. Or do you know the long-term expected returns of various asset classes, of say gold, of say the S&P 500, of Bitcoin, of altcoins? When we don't just own crypto, but we also own property, for example, and we've got that portfolio, what kind of returns do we need in order to beat monetary debasement, but also in order to at some point to get financially free? How much money do we need to have enough passive income to not having to work anymore? What are expected long-term returns, and how much should we actually allocate towards crypto and towards property, towards stocks, gold, bond, etc.? What actually makes sense? When there are tens of thousands, hundreds of thousands, maybe even millions of dollars on the line, not having this properly nailed down is a huge problem. And when the market isn't that great anymore and the upside for Bitcoin could be somewhat limited, how can we still make money? How can we make money from charts like this? What we see over here is Balancer relative to Ethereum. We can make money by shorting this. Balancer has very bad tokenomics. The supply increases over time, and so it tends to do worse than Bitcoin and Ethereum over the long term. And we can make money from that, again, from the relative valuations, not just from US dollar valuations. When we look at how quickly is the monetary base expanding, and we put this into relationship to how quickly are salaries increasing, we actually see that pretty much everybody is falling behind over time. And this is not just true for the poor people, this is even true for the top 5% of earners. By the way, if you earn $500,000 per year, then you are in the top 5%. But yeah, data like this is useful. And those are not necessarily the sexy topics that work well on YouTube, right? On YouTube, it's the 100x altcoin gems that get all the clicks. But when you talk about diversification and correlation, etc., people just fall asleep. But it's the long-term planning, the long-term proper allocation towards different asset classes that actually make the difference. And so have a look at all of this. Those are tutorial videos of the premium membership of this channel. It's down below, thebitcointrader.com. There's more than 100 tutorial videos in total. What are my favorite crypto macro indicators? How do interest rates impact different asset classes? We've just seen how the market got spooked because the Federal Reserve might get more hawkish. Or how do we adjust our returns for risk mathematically, right? Everybody can get more returns by increasing the risk massively, but the idea is we want to get the best returns for the risk. And so there are ways to calculate this using alpha and beta. Those are all very complex topics, but I strongly believe that it's the skilled people, the people that have most knowledge, that tend to make most money over time. Now, besides all of those tutorial videos, there are also various chats in premium where I try to be active as well. So in case you've got any questions, just tag me in a message in those premium chats and I try to reply. The membership is currently $165 per month. This is not for people that only have a net worth of $1,000, right? This is for people that actually have to manage wealth in the tens of thousands, preferably even hundreds of thousands of dollars. There is a 1-week money back guarantee as well. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. Now, if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.